Welcome back. Here at our table for the Friday, June 18, 2025 installment, Ted Seifried. Ted, first off, thank you for coming to LeClaire, Iowa with us.
Oh yeah, that was
a
fun.
good time.
That was really good. Yeah,
Did you
thanks for
get
inviting me.
stuck in the tornado like we did? Or
Nope.
tornado warning?
It chased me. I was going the opposite way, so it chased me the whole way, but luckily for fast cars and quick driving, I avoided it and managed to get into a garage before the severe stuff happened.
Good for you. I want to let you know, in the newsletter this week, we talked about the next event we're going to have, and it's the last event celebrating the 50th season. Subscribe to that Market Insider newsletter. We'll tell you the details of how to join us for this last one. It's a biggie. Speaking of big, we've had a nice little rally in hogs. Let's see if it can continue with this lead-off question. Matthew wants to know, Ted, how long do you see the hog market staying up, and how do you see the year finishing?
Yeah, I'd like to see the hogs go back up to those highs, right? If you look at a chart right now, for the most part, it looks like a correction in an otherwise bull market, especially because of where we've just held, and that bounce that you've talked about kind of says, hey, that was just, corrective in nature. The underlying fundamentals for hogs, I think, are still fairly friendly. The big thing about that is that we're buying. The American consumer is not afraid to spend. So it's a little bit of a drawback on pork because, it'd be great if people were to want to save a little bit money and go for the cheaper cuts of meat, i.e. look for pork. But at the same time, we're buying everything, right? So I don't think it's mutually exclusive. And so, yeah, I like the upside potential for pork. We are doing business with China and Mexico, and our bigger pork buyers continue to be on that export sales sheet, so that's helpful. I'd like to see us go back up and test those highs.
We talked about live cattle. Let's talk about feeders. That was the one that was off this week.
Yeah.
What's going on there?
Well, I mean, that was really because we were down sharply on Monday, but then we came back like gangbusters on Tuesday and Wednesday, and then kind of tried to go lower on Thursday and Friday, but both days bounced off the lows. Especially Friday, we ended up closing $3 off the lows. And it is just sitting right underneath these highs. It actually did make a new high, but didn't make a new high close throughout the week. To me, that looks like a market that is kind of collecting itself, fixing the overbought condition of the relative strength index and getting ready for more highs. And that's all stemming from the fact that the American consumers still, their appetite for beef, despite high prices, is still very, very strong.
Let's discuss now back to the farmer who's looking at inputs, because that would be everybody.
Yeah.
Ethan in Kansas wants to know, inputs are high, grains are cheap. Where's the light at the end of the tunnel?
Hi, Ethan. Yeah, that is, I mean, look, and you can talk about land values, you can talk about everything that goes into the cost of production for corn is really high, and now we have low prices. I don't know. A lot of global unrest has been part of the reason why input costs have been as high as they are. Russia's part of it. The Black Sea area or the Red Sea area, really all of the issues, the global conflict has created problems for different input costs. And I don't know if that's going to change anytime soon. Markets do what markets do, right? And that is, if the market feels like we have sufficient or more production than necessary, then the low prices are a function to try to slow down production. And that might come in the form of not necessarily less acres, but less inputs applied, right? And therefore lower yields. And I do wonder if that might be a thing for next year, if we're going to stay down in these lower prices for an extended period of time, or even continue lower. I hope not. So I don't know. The markets do what they can to sort of fix themselves, I guess. I'd like to see input costs come down, but I don't really get a strong feeling that that's going to happen in the very near future.
This one's very specific. Louise in Kansas wanted to know about inputs or the break even on wheat. She says right now it's at $7.20 a bushel, making a 54 bushel yield according to the K-State economist Dan O'Brien. Where are we going with that cash price now at $4.50, and how long can we last?
Yeah. How long can we last indeed? And again, a function of the market. When you look at the USDA's balance sheet, and domestically we're talking about almost a billion bushel carryover in wheat, this is the market screaming, hey, we want you guys to produce less wheat. So when you have that break even in the negative by as much as it is, again, that's the market asking for something. And I guess when that changes is when the fundamentals change. If there is, like we talked about in the main program, if we were to see a significant increase in exports above and beyond the increase that the USDA just made 2 WASDs ago, then we can start talking about a tighter balance sheet. Then we can start talking about, hey, the demand is there. It's going to offset some of this big supply, and we should start talking about higher prices. But until then, this is a market that wants less supply because a billion bushel carryover, or near a billion bushel carryover domestically, the market's saying that's way too much.
Well, let's talk about those that are in long and short positions. Phil wants to know from you, what do we think it's going to take for traders to get out and start getting out of their short positions?
Well, hey, Phil. It depends on what who the trader is, right? If we're talking about funds, which I'm suspecting that's what it is, or what Phil's question is they're mostly technical traders. So you do things to break technical resistance levels, and all of a sudden you have short covering happening. And corn was working on that actually pretty hard this week with that almost textbook key reversal that we had on Monday. Now I say almost because the qualification for a key reversal would have been that we had to close over Friday's high, close over Friday's high on Monday. We closed directly on top of it. So we were 1 tick away from having a true textbook key reversal. Either way, that it was an impressive day, and that got the attention. We saw some follow-through short covering throughout the week. But by the end of the week, we ran into the upward end of this downward trending channel, and we didn't break it. So for now, I think that funds probably are going to be done covering their short positions unless we come in Sunday night into Monday with another threatening forecast and the market starts higher or gaps higher and breaks that technical resistance level. Then you can see this next round of short covering. But if that doesn't happen, I don't know. You wonder if that might have been the extent of it. Now, as far as short covering from producers, farmers, hedgers, well, I don't know. That's a different mentality, right? That's not necessarily a technical thing. That's does my crop look bad? Do I really believe the Twitter pollination issues? Things like that.
I have questions that match up with what you're saying. Can I give them to you?
Sure, go for it.
All right. He reads ahead. He's very smart. Ted always studies. All right, I have 2 Mike in Iowa. They're 2 different people, trust me. One's from Eastern Iowa, one's from Western Iowa. Mike in Eastern Iowa wants to know, corn crop looks great. I'm hearing that some are having 3 ears. Are we on the brink of dropping off the cliff? And then Mike in Western Iowa says, how serious does the pollination issues have to become for funds to take notice? How soon till it matters, August or post-harvest? So you have these 2 things out here, Ted, playing in 2 different parts of the country. Heck, 2 parts of Iowa.
Yeah, 2 parts of Iowa.
What do you make of that?
Well, hi, Mike, and hi, Mike. Hi, Mikes. Yeah, and I think the market's trying to figure out what to make of that as well. The 3-year thing, hey, look, end rows. I've seen it too. I bet you if you go, 30 paces into the field, you're going to see a little bit of a different story. But I do think we're going to have some viable second years this year. At least that's my feeling at the moment. I'd like to get out there and look for myself a little bit more, which I will do fairly soon. But yeah, if I don't want to give a whole lot of credence to like these big yield numbers that we've been hearing from some private analysts, but if we are headed into that neighborhood, I think it's too early to say, but if we are headed into the upper 180s for a national average yield, then yeah, we do have quite a bit more downside work to do for that corn market, I would say. But on the other hand, if these pollination issues are much more rampant than what we've seen in the past, and all of a sudden we're talking about a 176, 177 national average yield, well, that's a really good reason to go higher. So I don't know. I've been really, really struggling with what to make of the whole pollination issue and the wrap being too tight. And, it would seem to me that might be, one genetic specific, but it seems like that isn't what's being talked about. So I don't know. Part of me wants to say, like, look, we find problems with the crop every year, and this is just like the absolute nitpicking of it's the last thing I can find. It makes me wonder how many of these years that we're seeing pollination issues are second years. And so I don't know. I'd like to go out and see it for myself, but when the market will figure that out is really after we get out there and combine. I don't think the market's going to really buy into the story of pollination issues until much later in the season, if it is actually a thing. And the other thing, and I said it during the main program, it's funny to me to watch social media talk about pollination issues that, here, look at this, but at the same time talk about, weather for pollination 2 weeks from now, right? I mean, pollination issues, well, you can't go out in central Iowa and look for pollination issues right now because it is pollinating right now.
But you could, I think what some people are saying who are east of where you are at is that crop is delayed. The Indiana, Ohio, Pennsylvania area is delayed, and maybe that's what's impacting it. I mean, is that a plausible explanation?
So I was in Indiana 2 weeks ago, and I'd say 30, or at least every third, I was in through Lafayette. Every third cornfield I saw was pollinating at that point. I would say they're there now. I don't know about Ohio. I don't know. I really get the feeling that the areas that I think we will be most concerned about will be past pollination by the time the really big, hot and dry forecast that we were looking at on Friday comes into play. But, look, it doesn't have to just be during pollination. Hot and dry can have a lot of effect on crops. It can still do damage after pollination. We saw that last year. So, as I said earlier, this is the most threatening short-term forecast that we've seen so far during the growing season. It's going to get a response from the market. Yeah, we had some long-term forecasts at the beginning of the growing season, April, May timeframe that were calling for, potentially the worst drought that we've seen since 2012. Well, those never really came to fruition. At least the first half of the growing season was not that way. So there's not a whole lot of trust in the long-term forecasts. There is trust in the short-term. And so that's what's getting the attention. And by the way, Paul, I know. We've never successfully predicted a drought correctly in April or May. So I guess looking back, that shouldn't be a shock.
So Boyce, he just answered your question because he was talking about long-term weather outlooks.
Sorry.
And you just answered that one. So real quick, if you could.
Yeah.
Ethanol, do you feel that has a little upside as oil continues to stay below 70 and there's this lower price right now?
Well, it's nice. I mean, if we're going to continue on with a 50% tariff on Brazilian imports, that means more domestic demand for our own ethanol. I like that. And with consumers' habits on summer driving season and everything like that, no, I think ethanol looks pretty good. I think the whole demand side of the corn equation looks pretty good. I will say, because you asked me to be quick, that part of me wonders if that was because of the quality of this past crop, and I do wonder if some of that demand will stick around for next year. That dry finish for corn did cut into production, but it made for a very, very productive crop. Great ethanol margins, good feed margins, great travel ability, great storage ability. That's why I think one of the reasons why the export market was a lot hotter than what we had originally been expecting. I do wonder if that carries over into next year or not, but we'll see.
You left off one great. It's great to see you.
Great to see you too, Paul.
Thanks,
Always a
Ted.
pleasure.
All right, Ted Seifried, everybody, thank you. Reminder, as I said at the beginning of this, to get signed up for that Market to Market Insider. Make sure you open it when it comes because we have all sorts of great things in there. Sign up at markettomarket.org. Next week, we take a look at a simple strategy to lower temperatures and open up miles of new habitat, and the commodity market analysis with Naomi Bloom. Thanks for joining us, and have a great week.